Hi, welcome everybody. Thanks for joining in today. If you have questions in regards to home buying in general in 2024, we're going to try to answer a lot of those. Um, the agenda, just quickly, is to break down a market update, kind of talking about our prior podcast a couple of weeks ago and what's transpired since then. The importance of the prequal because of the information we're going to share on that, as well as analyzing both micro and macro markets, as well as how to get the best reports to help you make good decisions about one, buying, and then two, buying in a specific area, and then some predictions for the remainder of this year and next. And then we're going to talk a little bit more detail rather than just our sponsorship of a perfect home buying process. I mean my host, co-host, Chase Hodgson. How you doing today, Chase?
Fantastic, Jerod. How are you doing this morning, man?
I am good, man. It's a good day. Sun's out, and it's just good day to be alive.
Yeah, if we got this odd, you know, springish-ish weather going on, so it's got me curious how long that's gonna last, right?
Yeah, yeah. We'll
If we're gonna
see.
get a bit cold before our time's up.
Yeah, I've just gotten to the point where I just kind of appreciate whatever I get thrown, and just try to lean into that, whatever it looks like, as best I can, reframe. But yeah,
Right.
we're going to talk about a lot of really important stuff today, and I hope what the viewers take out of this. And being live, feel free to chime in and ask any questions that you might have. But really, it's to help you take in all of the different information, digest it, and then what to do about it going forward, so that you don't look back with any regret or anything like that, or feel like there was pieces of information you didn't get. So with that, Chase, real quick, I'll bounce through the housekeeping items. For
Yeah.
those for those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection, also known as MHC Realty. Our sponsor for the day is our perfect home buying process. We've developed this over the last couple of decades. There's a lot of components to it that we've brought in to just make that process as smooth and as pleasant and as inexpensive as possible. We've got a lot of reports, some of which we'll be showing you today. We'll share real estate secrets that we feel like consumers should know that just generally isn't shared. Um, We've got a relocation and lifestyle guide that's just been refreshed for this year. We're super excited to sharing about all the different ins and outs of the Treasure Valley. Um, we have the no obligation free consultation that you can take advantage of. And when you're doing that, Chase has partnered with us to get you up to $500 contributed towards the appraisal during your home purchase. And we're also going to help you with up to $500 on your home inspection. So bringing that peace of mind as well as minimizing your costs. And we'll cover some of these today just because they're applicable to our conversation. But with that, Chase, really, it's interesting how quickly the predictions that we made a couple weeks back in our podcast have already started to materialize. Um, you
Yeah.
know, and I'm not saying that to toot our horn, but really it's the rumor mill, it's the speculation versus the data,
Hmm.
right? We when we talk about what you should and could do, it's based upon things that inevitably don't change the way that markets typically unfold. By that I mean the supply demand ratios are just inevitably kind of the truth teller and a good predictor of what's going to happen. We thought inventory's low. The demand appears high because we got a lot of people looking online at properties. And usually you don't do that unless you're pretty interested. So the demand seems very high, even though the homes aren't turning. You fast forward a couple of weeks, and we're in some of the areas within our market, we're seeing multiple offers and above
Hmm.
ask purchases.
Yeah. It's difficult, like you were saying, because we both make our livings off of selling homes, right?
Mm-hmm.
So when people tune in and they hear us say, "Oh, it's time to buy," there you expect some bias there. And granted, we both want it to be a good market, but all the information that we share comes from the data, like you're talking
Hmm.
about, right?
Hmm. Hmm.
Uh, it really doesn't. What people need to understand is it really doesn't do us good if we put you in a home off of our hearsay, off of our information, our, recommendation, and then it goes bad for you, right? Because repeat and referral business is the biggest chunk of what we do, right? And so if we put you in a bad situation, then that looks badly on us.
Hmm.
Um, we talked about it a couple weeks ago, but you and I have been talking about it for months,
Hmm.
right? A lot of the experts have said the same thing, that the same things that we have with supply and demand, and as interest rates come down, I still am getting a lot of pushback as to interest rates not coming down. It's gonna be bumpy and slower than we would like, but they're trending down. I mean, if we look at the mortgage-backed security charts, today we're up, another almost 30 basis points. Basically we peaked on about January 28th
Hmm.
for the bond market, right? And so to break that down a little bit, the bond market basically helps. It's the market's way of determining where the mortgage rates are going to go, and how the mortgage-backed securities are traded. Um, that's really the only thing that affects mortgage rates. Unfortunately, as we've talked about before, there's a ton of things that affect mortgage-backed securities, all the political, all the economical, um, all of those things affect it. But we have on the 28th we hit our peak, 28th of December, and since then it's kind of trickled down and been kind of stagnant, and
Hmm.
now we're seeing mortgage-backed securities go up, which is good for interest rates in turn, right? So
Yeah.
it'll do that. It'll go and then it'll stagnate, maybe come back a little bit and go back down. But the trend over time, I mean, that peak on the 28th for the bond market, that's the best we've seen in since April of 23.
Hmm.
So almost a year.
Hmm. Yeah,
And
and
so we continue to trend to the better. And with that, to your point, I've gotten busy, you've gotten busy, multiple offers. There's not really a lot of inventory out there.
yeah, and I want to somewhat repeat but encapsulate what you said, from because I think it's important to note is a couple of things. You and I operate under the understanding that we're going to serve people,
Yes.
and ultimately, our business is built around repeat and referral business. People don't
Hmm.
use or come back to our services unless they're extremely well satisfied with what we do. And they're certainly not going to recommend our services to anybody else unless they're well taken care of. So that is first and foremost. This is a long term. I hate to say play, but that's our business. It's a long time. I'm in it, for the
Yeah.
duration, and I don't
Yep.
have the luxury of thinking short term, like some agents do. So that's important to note. A lot of the information that we'll provide to you isn't just our speculation, but it's us listening to, the high end analyst, or the promises. Like, for example, the Feds, they've promised to bring rates down, and there's no
Hmm.
reason why they wouldn't, because the reason they're even up is because it's artificially inflated to curb inflation. So it
Hmm.
makes sense why they would promise what they're promising. The catch, or the important thing to note here is, and one of the things that I wanted to share, is the pre-qualification process, because it it's everything that we share with you would only maybe pertain to your specific situation as long as you meet within the parameters. We might very well
Hmm.
tell you now is not the time. We don't want you to
Yeah.
get overextended. Uh, for most folks, it makes sense now because we totally anticipate prices to go up, and it looks like they're going to go up pretty aggressively in the short term. But
Yeah.
if what you need and what your budget is, it's just going to stretch you and put you in a bad position, and things do take a turn and you can't recover, that's not helpful, to you. So we always recommend having your ducks in order, getting a plan spelled out, and being able to do what it is you need to do for your particular personal situation, sooner
Yeah.
than later.
Well, and it's helping people understand, like you talked about the process, um, what they need, what they, the difference between needs and wants, what they can afford financially. I mean, at any step of the process, we can help. That's breaking it down as simply as I possibly can. On the financial side, there's budgeting that we can help with. There's credit repair that we can help with. There, all different amounts of things that we're here for. And so it's a long-term relationship that we're shooting for. And so putting that false information out there, like it makes no sense, right? Like we're trying to build clients for life, and help them, with all their real estate needs and all their friends and family.
Right. Right. So, I don't want to belabor that point, but really to move on, I just wanted to communicate to our audience that, again, we're sharing this information not for our gain because we are in this industry and that benefits us. It's legitimately to help folks not feel regret, not miss the mark, not get into home ownership, and really at a general level, high level, it's always better to buy today. The best time to buy was 10 years ago. The next best time is today. That's an overarching comment or a way to approach the market. Now, there is personalization and things that need to be factored into that. But, we got to prove that you're not ready rather than be ready.
Right. Yeah, no, absolutely. And it's one of those things, right? Like even with myself, I'm an investor, own a number of homes but it's at the same point, like you want to try to time the market as best you can. Buy at the low, sell at the high. That's, whether it's stock market, whether it's real estate, that's what everybody always wants to do. Well, the thing you need to remember is there's no real way to time the market. The majority of the time, if you have a U curve, right? U curve,
Mm-hmm. Mm-hmm.
you got the market's coming down on this side, and the market's going up on this side. The number of people that time the exact bottom is unrealistic, right? Like it's not a number that you can count. You've got people that have always made money, that have done well making money in the market. It's not because they timed the bottom. It's because they bought or sold before it got there, right?
Right.
Before it got to the bottom.
Yeah.
And so that's what you need to think of when you can afford to buy, especially if it's a primary residence. Then you need to do it because you don't know when the next big burst of appreciation is going to come, and that's really what affects your long-term wealth.
Yeah. Yeah. And you made a great segue to kind of the next topic that I wanted to get into, and it's some of the reports that we can send you in an automated fashion. And it clearly helps with the micro versus the macro market, because specifically in the Treasure Valley here, it's important to know what area of town, what price point, because it can vary. I can tell you what's happening in one market is drastically different than another. But there was another point that you had made. Oh, and that is that we've talked about before, and that's the fixation on the price of the home isn't the important part, because they want to wait till home prices drop. Yes, it's a consideration, but really it's the adjustable attribute is the interest rate. They have gone down, like you said. They are projected to go down, and that can be corrected over time, whether it's when you actually close, or we get help from the seller to help you buy down the rate, or it's a refinance later. But the purchase price, once you purchase it, is the purchase price. So to fixate too much on that, which is most often what most people fixate on, is missing the mark.
Yeah, I wish I would have thought to put a visual together, but home prices have settled, and everybody likes to, because it's the last time that we had anything major, everybody likes to refer to '08, and that's a lot of people I talk to. That's what they've been expecting, right? Mm-hmm. But if you follow think of a line going up from an axis like 45 degrees, right? That's about what the historical appreciation follows, and home sales or home prices, right, have kind of done this along that line, but overall they've followed that major trend line. And except for a couple times, right? '08, right before and right after, there was that major crash, and major inflation before that, but that was all real estate driven, right? This is a completely different time. Prices were pushed up because of supply and demand. There was not enough supply for the demand that we had, and the economy people thought still fairly strong, even though the government was pumping a bunch of money and overinflating a lot of things. And so with this time, we saw prices rise above that trend line, and what we've seen in the past months, year and a half or so, is that it's basically just settled back down to that trend line. It hasn't gone below it. It's settled back down to a normal appreciation line, which is typical for a recession or slowdown in the economy. There's only been, in the last 50 years, there's only been 2 times through any recession where we've actually lost value in real estate, right? Yep. And that was, way back when, and then 2008, and those were not typical recessions. Normally in a recession, it goes back to maybe a small increase in appreciation or flatline.
Yeah, and that's a really good point, because I think human tendency is to lean on what you've experienced in the past. If you're a parent that went through '08, '09, and your kids are looking to buy, or you're thinking to upsize or downsize, those feelings come rushing in, because you got kind of pummeled during that time, and our brains are wired to not repeat painful experiences. So I get it. But to your point, we have to know that today, it's 15 years later, things are different. The government changed a lot of the guidelines around being able to buy. The inventory levels are different. I mean, there's just so many factors that make for a totally different market. And by the way, our Treasure Valley is hyper unique compared to not any other, but most other markets. And this is the segue that I was looking, to make, and that is, let me go here. And this is going to address a couple of things. So what you'll need to know is, you can't just generalize the national market, and you can't generalize the Treasure Valley market either. One of the things that we can do is send you reports. We've got a number of reports that we can send you, and you can get firsthand visibility to property alerts about what's going on in the area you're looking at, the price point that you want, some market snapshots, and then market reports that can come into your inbox, and you can see this stuff. This is real live data specific to what it is that you're looking for. So as an example, I just set myself, I'm an Eagle, and within kind of my price range, I'm not a buyer right now, but as a buyer, I can look at it at a micro level, because my area of the Treasure Valley Eagle and my price point is going to be different than, say, Caldwell at a different price point. But these reports can give you an idea of what's going on. I mean, you see here, the median sales price, made a pretty sharp jump as we anticipated, about when we anticipated it. And it came to fruition, actually, to be honest, a little faster than I thought it was gonna. But for the market to pick up in January has almost always showed a very strong year, in my experience. Usually it's kind of March, maybe late February, April timeframe. So if this is any indication, I think it's going to go a little crazy. But to get these reports in your inbox, home values, in this segment, and I can hone in what reports we get you, has already gone up $16 a square foot. Kind of just as a general number, that's getting pretty significant. The median sale to the price that the home was listed at has gone up. The amount of deals compared to last year, how many went on the market versus how many closed. So, you can see, by the way, median days on market, how long they're staying on market. Obviously, if this number is going down, it means it's becoming more and more of a seller's market and going to get more and more competitive. So as we see these median days on market go down, sellers are stronger, buyers are weaker. But my point is, to stay on top of this and see it, be talking to us in real time, and then looking at what our projections are. somewhat of the crystal ball stuff, factoring in wisdom, logic, analyst predictions. I think this puts you in a much better position specifically to look at your needs.
Yeah. Yeah. It's all good, credible information, knowing your market, where you want to live, what you want to need, or what you need, Um, this is the real time stuff you should be looking at and not watching the news. Nationally, what people are saying is going on with the real estate market.
Yeah, because nationally it's a broad stroke, and there might be markets that are suffering, are going to suffer more. So we got to look at the Treasure Valley, and then hopefully you're looking at the market that you should be looking at. For example, if they haven't got pre-qualified with you, and they're looking, preferentially at Boise, when in reality, had they contacted you, the reality isn't there that Boise's the market they should be looking at. They could be spending a lot of time looking at Boise. Boise's heating up faster than, let's say, Nampa, and you get discouraged because you see home values going up, but maybe Nampa's initial prices are lower, which means you're qualified for it and aren't quite ramping up as quickly as Boise. Then you're not so discouraged. But anyway, I guess I had too much caffeine this morning or something. But the point here is, you got to be getting good real-time information that's personalized for you.
Yeah. Yeah, that's the important part.
So let me glance back at some of the other information we wanted to chat about. Well, I guess, we're 21 minutes into this, so I guess, have been talking quite a bit, but let's talk a little bit about the predictions based upon now seeing evidence of what we already anticipated.
Yeah. Obviously it's coming true, just everything that we've talked about. It's hard to say. There's so many new things going on in the economy, right? Or that affect the economy, whether it's the political stance, and I don't care what side you're on, is causing volatility in our economy. You've got what's going on in Ukraine. You've got uneasiness with Iran and with China. All of those things can affect and can change. And kind of the way that I've always approached it is that you have to drill down. You have to be able to control what you can control, right? So we take the data that we have and we make the best decisions today that we can make moving forward, right? That's all you can do. You don't know what's going to happen with those, and so basically you just have to do what's best for you and your family right now. And that's kind of how I always live my life and the way I make my investment decisions. I can tell you that at the end of December, the numbers were that pending home sales were up 8.3%. And that's a pretty big jump compared to, I think they predicted like 1.5%.
Yeah.
And so that small, I think our rates peak pretty close to about that 8%, some a little bit higher, a little bit lower, depending on some markers. We dropped all the way down to high fives, low sixes, and then they've kind of trickled back up. We're kind of, I would say, overall nationally, probably mid to high sixes currently. But just that 1%, 1.5% difference caused a major jump in people's habits and their decision-making process around real estate. And so I think, Freddie Mac and Fannie Mae are both predicting pretty low numbers for the end of the year. I can't remember which one of them was like 4.5%. I don't know if I'm quite that optimistic. I think there's still some political volatility. I think before the end of the year, we'll be very solidly in the fives, which is just fantastic, right? Like that's a big move downward, and probably quicker than I would have expected if that comes true.
Yeah. So if we had that much interest, that many homes going under contract with that improvement in interest rate, just think if the trend continues when seasonally people start coming online, because really our normal buyer's market isn't even online yet. They're waiting till summer because they want to move when the kids are out of school and the weather's nicer. So if we're seeing this demand already, it's going to be pretty severe. So we know inventory is low. That's not in question. We're hearing and seeing interest rates are going down. My other indicator that I'll look at is there's large, sophisticated builders that analyze in great detail what's going on in our market, and they've got a lot riding on this, and we see them doing nothing but blowing up in construction. They're clearly in it to meet the anticipated growth of our market, because they know that they're way behind. They know their values are going to go up because of the supply-demand ratio, and we see them going all in. So, there's even more evidence that there's sophisticated people looking at our market.
Yeah. Yeah, it was 23 was for all intents and purposes, 23 was a very difficult time in our industries, right? Mm-hmm. And we can see that the changes starting to happen now. And you speak about builders, and pretty much everywhere you look, there's new homes going in, right? And I think perspective-wise, again, we have 10 million more buyers than this country's ever seen that are at that point where they need their first home. And so a shortage of supply that's a foregone conclusion. We've never had the amount of homes that we need to suit the demand that's now coming online. I think perspective is needed a little bit around the interest rate. A lot of the home buyers that are hitting the market now, all they know is 2 and 3%, which is weird to say, right? But that's that age, that generational thing, right? Having bought my first one at 6.5, when we hit 4.5, what was it, 4 years ago? Everybody's just like, oh my gosh, this is like Disneyland. Let's go, Mm-hmm. So to know that they got into the 3s and the 2s, you have to realize that that's artificial and that's not normal, and you have to approach real estate buying with that in mind. And yes, home prices are higher, but so are wages. There's a statistic out that basically, and I think it was like in the 80s, if somebody bought a home based on the median home price and the median income, their payment in real dollars felt like about $2,200 to them. Mm. So much more in line with what we're seeing today, right? As opposed to, well, they only paid, $80,000 for a house. Well, yeah, what was the minimum wage back then? Was like $250 or $275,
interest rates were 3x, 4x.
Yeah, exactly. So you have to realize, that we don't have it as bad as we like to think we do. Just gain a little bit of perspective, do a little bit of research, and understand, what to expect when you're buying a home. And again, that's why we're here. We can help walk you through that and what that looks like.
Yeah. Just to lighten the mood a little bit, but, you see these, reels or shorts or whatever. And I'm amazed at the amount of reels I see that say, wouldn't you in today's market have liked to have been the person, at the start of COVID that bought a home and then be benefited by the equity that you get, during COVID and post-COVID, because the values went up. They're comparing and contrasting that. Again, I suggest we don't look at the past before, but anyway, it was just kind of comical how that worked out. But let me bring up something else too that I meant to share.
For all intents and purposes, we're going through that again now, right? Like realistically, right. Get in now and realize that appreciation when the supply runs out because the demand's back online.
Yeah, or the people that regretted not getting in and now they just can't afford it, right? And they're, frustrated because they thought COVID was going to be 08, 09, and in reality it was the extreme opposite of that. It made home values go through the roof, home prices go through the roof. So, anyway, one of the things I wanted to share just real quick is on our website here, you can get these reports, but you can also just go to the not neighborhoods, but the, neighborhoods. So for example, I went to Eagle here and shows you, outline of the market, the average home price, the median sales price, just more statistics and data, total listings, population. But there's also these tabs where you can see what the market trends are. So if you've logged in and you get these trend reports, they'll be shown to you when you come to the website. There's different valuable information such as schools and ratings, rankings, things like that. Local information as well as demographics. So just a lot of information. Again, hopefully you've talked with Chase, picked your market, identified your price point and budget, and now you're looking at stuff that's applicable to your situation. So anyway, I just wanted to share that as a potential additional valuable resource in and above the reports that I show here.
Yeah,
So.
wow. It's like a one-stop shop right there, Jerod. You've done a nice job with that site.
Oh, thanks. Yeah, and we're, to your point, the perfect home buying process is trying to bring people a lot of tools so they can see the data. We develop podcasts, and you've been super helpful in contributing on that to send out weekly, podcasts people can watch and get their questions answered. What is earnest money? How can I lose my earnest money? Why would I do an inspection? Why would I not? What's to expect at closing? Things that we're certainly going to share with you, but we talk through it to give you a lot of valuable information so you feel more comfortable with the process. And I'm kind of segueing to wrap things up because we're already at a half an hour here, but just to kind of revisit all this is what's entailed in that perfect home buying process. But really this third to last item here, this no obligation consultation, that's the kind of critical piece that we want to share with folks, because that gets the personalization into it,
Hmm.
where you're going to see the data, you're going to get the podcast, you're going to feel more comfortable. Obviously we're committed to helping you be successful, but now we're going to drill into what are the personal attributes of your situation. What's your credit score? What's your DTI? What are your timelines? What are your short, mid, and long term objectives? We got to factor all of that in, and that's very personalized.
Right. Yeah,
So,
everybody's different. All real estate agents and all lenders are not created equal, and
right.
so yep, you need to understand what you're getting and what the difference is, and definitely work with people that have your best interest in mind.
Yep. Yep. So, I think the last thing, we'll just kind of wrap things up. We've gone over the half an hour mark here, but, we've
This
got
goes
our
by
web.
so
It does, doesn't it? But you've already seen our website. If you want to reach out to us, it's got our phone number, and email address here, and just all the tools that I mentioned to you. Um, Even including our lifestyle series, which is the Why Idaho thing. We're super proud of developing that out and talking about the different areas of why you would move to Idaho with embedded podcasts, things like that. So extremely valuable resource. That's contacting My Home Connection. Chase can be reached on summitfunding.net.com, and his contact information is all down here. And just reference the perfect home buying process, or feel free to reach out with questions that you might have, and we'd be glad to help.
always glad to
So
help.
yeah, yeah, absolutely. So is there anything else you could think of, Chase, that we might want to interject?
Lots, but yeah, we got to keep it short. So no, like I appreciate the time. I always love talking about the market. I'm kind of a junkie. Get my reports every day. So yeah, like I can't. I just want to stress. Like if you don't know, reach out. Let us help you decide if it's the time for you.
Yep, yep. And my kind of approach, and I always state, is we treat your home purchase or home sale just as if we were doing it or a family member was doing it. We try to put as best we can our feet in your shoes, and take care of you as we would want to be taken care of. So anyway, I think that's a good place to wrap things up, and we'll wish everybody a blessed one. Thanks.
Take care. Thanks again, Jared.